I never know what markets are going to do. There's never been a time in my life when I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I never felt that I knew it, and I've never felt it was important. I will say that in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
Most investors do not lose money because they buy the wrong asset. They lose money because they sell at the exact wrong time. The stock market is not a rational calculator. It is a roaring machine designed specifically to create noise, panic, and terrifying headlines. Its primary function is not to value companies. It is to violently shake out the weak hands, to make you drop your most valuable winners right before they compound into generational fortunes. This is the price of panic, and it is the single most expensive, most devastating mistake in modern finance. Sharks and titans, the stories they never wanted you to see. Your brain is biologically wired for physical survival, not financial compounding. Behavioral economists have definitively proven through prospect theory that the psychological pain of losing $1 is literally twice as intense as the joy of gaining $1. When you see a sudden drop on a screen, your amygdala fires instantly. It does not see a healthy 22% correction in a cyclical bull market. It sees a physical predator. It screams at you to run, so you sell. You lock in a permanent loss. You feel temporary relief, but you just fell for the human glitch. You bought at the peak because of FOMO, the fear of missing out, a dopamine rush driven by endless rising green lines on social media, and you sold at the absolute bottom because of uncontrolled panic, cortisol flooding your system driven by falling red lines. You traded a long-term generational asset for short-term emotional comfort. You thought you were protecting your family. You were actually funding someone else's retirement. The market took your shares, and it will patiently sell them to someone else at a massive premium next quarter. While the middle class is panicking, the Leviathans are quietly feasting. When the market bleeds, Warren Buffett does not sweat. Institutional market makers do not close their terminals in fear. They see an unprecedented clearance sale. They understand a fundamental truth that the terrified retail investor absolutely refuses to accept. Wall Street is not a charity. It is an extraction machine. Crashes do not destroy wealth. They violently transfer it, from the impatient to the prepared. When you panic sell your high-quality assets, you are not exiting the game. You are voluntarily handing your accumulated capital to the exact entities that engineered the panic in the first place. Algorithms aggressively track your stop-loss orders. They deliberately push prices down to trigger your automated fear. You are the liquidity. The titans are waiting on the other side of your desperate sell order. They buy the precise assets the frightened public is throwing away. They buy aggressively when the mainstream headlines are completely apocalyptic, because they know those headlines are just psychological marketing material designed to separate you from your ownership stakes. Then there is the math, the cold, unforgiving, brutal math of compounding. Trying to time the market is a mathematical fool's game. Institutional data spanning 2 decades definitively proves that if you miss just the 10 best trading days over a 20-year period, your total return collapses by more than half. And those best days almost always happen right in the middle of a sudden violent crash, right when the panic is at its absolute peak. By staying permanently invested, automatically reinvesting your dividends, and ruthlessly avoiding the friction of constant trading and short-term capital gains taxes, you mathematically outperform 90% of highly paid active fund managers. The friction of buying and selling slowly bleeds your account dry, while the government takes its cut every single time you let fear dictate your trades. Holding is not a passive action. It is an aggressive, highly calculated strategy. It is a violent refusal to participate in the emotional destruction of your own portfolio. The market does not care about your feelings. It does not care about your fear. It does not care about your logic. It only rewards those who can endure the agonizing pain of being temporarily wrong to be permanently right. The next time your screen turns red, remember this. The crash is not a tragedy. It is a psychological filter. It systematically eliminates the emotionally weak and violently transfers their hard-earned wealth to the emotionally disciplined. Selling your stocks is not a defense mechanism. It is an act of pure surrender. And in the ruthless arena of public markets, surrendering your shares is the only guaranteed way to permanently lose the war.